Hi, this is Jack from Alpha Charts with a long view video. Today is May 15th, 20. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, before you go further, please like and subscribe to my YouTube channel. I thank you. Again, I am trying to grow the channel, and the metric that I am following is subscribers. So if you haven't subscribed yet, please go ahead and subscribe to the channel. I put out usually 2 to 3 videos a week. And you can also catch me on Twitter at AlphaCharts365, where I put out other commentary throughout the week. So thank you for doing that on the subscription. Thank you. All right, let's go on to long view. A quick explanation of what the long view is. The whole point of long view is to find relative strength on a longer term time frame. Okay, I'm using weekly charts. This is great for somebody that is working full time and can't watch the markets every day, or can't trade in between, intraday, that they needs things to happen over longer time frames on the weekly. I'm also using ETFs to minimize risk, single stock risk. Again, as part of my risk mitigation. And this whole point of this is to follow the trends. There'll be 2 moving averages on the chart, the 8-week and the 13-week EMAs. That is used for trend. And also I like to use the 13-week for a potential trailing stop area. Down below, you'll see the Trader Lion relative strength line. It's set to the SPX. You can set to whatever you want to, and I do change that around. Part of my process, but the end part of my process has it set to the SPX, which is a broad indicator of the market, right? Again, the number doesn't matter. The direction matters, okay? Again, I'm looking for outperformance. I'm looking for, setups. I am looking for things that will lead the market higher, okay? So that's what we got. So let's go. There wasn't as much as I thought this week, but that's not a bad thing either. All right, first one, energy. So energy is still showing up, but only one ETF actually showed up that I really am interested in, and that's less than prior weeks. So is the energy trade starting to fizzle out? I don't know. Time will tell. But this IXC, global shares, has this nice little setup here. Now, again, if it's fizzling out, chances are a breakout won't happen, or if it does happen, it'll fall back very quickly. That remains to be seen. I would not blindly buy it here. I don't think that it's the right spot yet. We have to see the way it shakes out. But if it gets above, 39, 30-ish, that's the place where potentially you could manage risk against. Okay. And again, I'd probably do on a shorter term time frame. When I say shorter term, I'm talking about maybe the 8-week instead of the 13-week, right? So yes, it's still a 2-month line, right? But it's shorter than the 13-week, which is closer to the 65-day line. So just be careful if it does break out, just because there's less and less energy names setting up. That says a lot. But within this ETF, you have equal. By the way, it's not quite equal weighted, but it is kind of equal weighted. Not kind of, but it's broadly weighted. Schlumberger, Marathon, TRP, Oxy's in there, Suncor, Valero, Phillips, Williams Company. They do transportation, I believe, of oil, Devon, Equinor. So again, you can see what the top weightings are. Again, not quite equal weighted, but it is a broad index. And so IXC looks pretty good. Again, and it's the only oil and gas index to me that looked really good. Is what it is. All right, let's move on. So let's talk about healthcare. So healthcare I almost put on here, but I can't rightfully put healthcare on here or any name in it if price is below declining moving averages, right? So even though there's some outperformance going on here, it's still in a downtrend. So maybe this holds, maybe it pops back up. I don't know. It's very possible. But because it's set up like this, I can't do it. Can't put it on there. Let's look at XLU. So XLU, retesting the breakout. It is an outperformance right here. So if somebody wanted to take that particular sector, I don't like specific ETFs for the XLU. I didn't see anything I really liked, but the sector itself seems to be doing pretty good, retesting the breakout. It is below the moving averages, so you could definitely, potentially use this low, 69.64-ish, as a potential stop somewhere around there. It's XLU, it's not going to move very fast. I'm sure it pays a dividend. I have no idea what that dividend is because I don't really care. But that being said, if it's got a good risk reward, but it's going to be a slow mover. Not for me, not included in this video as far as what I think. XLP, another one. You have the outperformance, but it hasn't done much. It's kind of choppy. And I didn't find any ETF that I really, really loved in this area. So I left it off. This XLP not included, right? So I want to mention them, but again, I don't think that they are good setups. So right now, IXC is the only one I like. Let's move on to materials. And the one I was expecting to really thought would be good was that Gunner one, right? And again, this is not the setup, but I want to just show it. So Gunner was one that is a really neat one because it's got some oil names, has commodity names, has a lot of different things in there. But again, this shows you the weakness that's happening. So yes, there's still outperformance, but underneath all the moving averages, I can't tell you Gunner's a good choice right now because there's nothing that says it's not going to come back and maybe retest this area or something of that nature. You see the time frame continuity right here, weekly, monthly, quarterly, yearly, not looking good. Can't do it. There's actually only one in the materials sector that I really like. So the ETF I like is the lithium ETF, and it hasn't quite broken out yet. So, again, this is not like a buy today, but with that being said, I like how it's starting to cross back over on the relative strength, and it has a very defined downtrend line here. All right. So if this can create a bottom and break this downtrend line on the weekly, right? So maybe next week is a better choice. But it was an interesting look to this. And so I wanted to bring it up. Again, it's one of those things where I can't really say buy today because I don't think it's really in a position to buy underneath all its moving averages. But I kind of appreciate what it's kind of trying to do here. Something to watch. Okay. Again, this is not one of those videos where I'm giving you a million names because there just isn't a million names out there to be given. We don't know if this is the bottom, if this is a bottom or if this is the bottom. Big difference between the two. So even LIT again, and here's the what makes up the constituents of it. Albemarle, 12%, and you see a lot of Japanese stocks. I'm not sure what C2 is, to be honest with you. So I guess it's South Korea, Hong Kong. So with all that being said, China. C2 is probably China. And yeah, I'm not sure what the difference between C1 and C2, but it looks like China. Anyway, Australia, whatever. So you see in the lithium ETF, a lot of overseas companies make it up. And again, not in a place where I would buy yet, but definitely one to watch, especially if it breaks the downtrend line. It would then be above the moving averages and then maybe in a buyable range. Okay, so definitely something to watch. It caught my eye. All right, so we have one so far, right? One. So let's add another one to it, right? DBC. So DBC is a commodities index that has both oil and agriculture names in it. You see it's back to a very important place. Good relative strength right down here, as you can see. kind of consolidating in VCP-ish style pattern right up here. And again, needs to break out, right? Right there, it needs to break out, but it's really at an interesting spot. So let's look at this ETF. You have gasoline, you have crude, you have aluminum, you have copper, natural gas, wheat, gold is in there, corn, soybean, zinc, sugar, right? So DBC, again, is this the point, where it breaks out? Could be if it gets above, $29.70-ish, $30, somewhere around there. I think this can keep moving higher. Again, it's kind of like coming into this area, consolidating, tightening up a little bit. I kind of like that. So that's DBC. Now, there's another one called DBA, which is an agriculture only ETF. And you can see it's got a similar type pattern. And I'm going to just put my line in there. And it's got this kind of inverse head and shoulder bottoming, whatever you want to call it, type pattern. It's kind of flagging right here into the moving averages. That's more on the daily chart that I was looking at this. So let me just take this out for now. But yeah, this looks really, really good. Good relative strength, good volume coming in. Looks fantastic. Now this one's agriculture only. So you see wheat makes up 17% of this and corn 15%. Soybean, sugar, live cattle, coffee, cocoa, lean hogs, feeder cattle, cotton, right? So you want to have exposure to agriculture. This looks like a decent fund to be part of. Again, there's your outperformance there. There's your volume coming in. The breakout, $23, right? Gets above $23. I think that's a pretty good spot right there. Again, nice little consolidation in here. Yeah, there you go. Even if you bought it here at $22, if you put your stop at $21.75, you're only risking a quarter. It's a tight stop. Don't get me wrong. I may actually would put it at the low of this day. Low is 21.27, so let's call it 21.25. So again, you're only risking 75 cents on this particular trade by putting your low right there. And it looks like buyers did show up there. So an interesting one. That's DBA. What else are we looking at? USO oil. So oil is, again, there's your outperformance, right? And it's been in this gigantic uptrend, literally bottomed April 2020, and has been an uptrend ever since. And now it's got this pennant going for it, right? And so it's closing within the pennant. And if you go to a line chart, you see it's right there, trying to break out. It looks better on the bar chart with the candlesticks. Anyway, trying to break out. Prior trend is higher. Expectation is this would break higher. We don't know if it will or won't until after the fact, but everything is saying that it could, and it should. Now, if it breaks lower, that's information too. But if it breaks this pennant to the upside, which is right there, $81.50, $82, somewhere around there, it could go much higher. So just be aware of that. Okay, so that is USO. Next one is UNG, natural gas. Okay, again, these are just individual commodity type plays, but there's no real ETF for them. But this is natural gas. Again, this is an area of importance. It is showing relative strength, moving higher. Looks really good. And again, it has maybe overhead supply, 45%. So that's a pretty good move if it does get there. So natural gas is looking pretty good. All right. So my top picks out of all these, and there wasn't that many picks, right? So it's easy to make top ones. I like DBC, right? I like DBC, pretty good. I like DBA even better than DBC because it didn't have the oil and gas exposure, which seems to be waning and like an overcrowded trade at this point. I liked wheat. Oh, did I do wheat? I forgot wheat. Here's wheat. So there's wheat by itself. So it's just one piece of DBA, but look at this, man. It had this giant move, kind of consolidation flaggy look thing, and now it wants to move higher. Looks really, really good. So that's wheat. And that's what I got for you. Okay. Well, good luck this week. And I hope you all stay safe out there. Take care.